Welcome to Investors Insights, where the topic this week is new month, new thoughts. Guys, a lot going on. We're coming off a pretty good February, heading into March, which is historically the second best month for the market. So we'll see if that stays true. But this week, a lot going on. Jobs report. Adam, talk about that.
Yeah, so lately we've been getting a lot of negative reports coming back, so we need something positive. I think a catalyst or an X factor may be this jobs report coming out Friday. Economists expect around a 1% gain. And then for the second quarter, they expect even more of a 2% gain. So that's around 185,000 jobs being added in February they expect. We'll see if that comes out. If it's below the average, we might see some volatility. But if it's above that, we might see a little good pop there.
Yeah, jobs report last month easily beat expectations. So it'd be great to see that again because not only do we need that to show up pretty well, because a lot of the reports we're seeing, manufacturing, some other economic reports are starting to go in the wrong direction. Right. So Ashley, talk about that.
Yeah, when we were looking at manufacturing, Bobby's right, those indices were off last week. However, if you do the research on it and dig a little bit deeper, part of that is the underlying uncertainty with China still. But the main thing in February was weather. The Midwest, that's heavy manufacturing, was hit with those tremendous winter storms. So if I'm a company in Kansas City and Bobby's a customer of mine in Chicago, it disrupted my supply chain selling to him. So what you should see is that's a little bit of a dip, mostly weather related, but probably back up on manufacturing.
Yeah, we really need the trade talk to continue.
Yes, we do.
We need the progress we're seeing to help out.
Yeah, because the manufacturers are holding off. They're not going to spend a lot of CapEx right now if they're still unsure.
Yeah. Trey, talk about taxes. Hopefully, we're starting to get some tax refunds.
That's right. That's one of the catalysts coming into the year. So what we were looking for is as a catalyst to move the economy a little faster, a little sugar rush at the end of the first quarter. So yeah, like you said, the fourth quarter GDP came in at 2.6%. That's a little lower than where it had been. People were expecting 1.9 for the first quarter. So data is coming in a little low, but choppy. Hopefully the jobs numbers, they've been strong. That'll hold strong. But people with jobs have to pay taxes. Death and taxes, only certainty. And so hopefully, though, those people that have been paying taxes all last year under the new tax code should receive a better than expected refund this year. Now, it started off a little slow, but if you have a whole new tax code, it takes a little longer to do your taxes. So we're starting to see a real pickup in refunds being sent out. Those people that get refunds, I know everyone at this stage, when you get a refund, it doesn't stay in your pocket for too long. You go back out, put it back into the economy. So we're hoping to see those refunds pick up, which should lead to an expected looking forward pop. All this data is looking backwards. We're hoping for looking forward, real good optimism out of the tax refunds.
Yeah, higher refunds, higher consumer spending, higher GDP, hopefully a higher market. So it's kind of a domino effect there that will hopefully come to fruition there. So thanks for watching. A lot going on. Call us, email us with any questions. Have a great week. Thanks.